morning, everybody. Good morning and happy Thursday. Good morning, Max, Chris, Will, Greasy, John. Got two Johns. The Oracle, Enrico. How y'all doing? Good morning, Tony. So I have this going down to a nice level here. Sell side liquidity. Hey, good morning, David. Will, is anybody else's trading view a bit sticky this morning? Mine's been okay, but I haven't tried to execute or anything. But yeah, I have this going right down here to this London low, Asia low. I wanted to see. I didn't want it to happen before the open here, but it's going straight down, so we may take that out. Let's go to the daily chart here. A little messy, got a lot of lines now. We have this daily fair value gap that formed with yesterday's close right here. So I threw my fib onto here. I wanted to see if we were going to reach up into it and come down, but we're going down first. We still have all this imbalance here. So with yesterday, we traded and almost closed this opening range gap from 1024 there, but didn't quite get there. We also have not had this 4-hour fair value gap right here, a BISI that looks like we're trying to head down into. And then we have this SIBI up here. So we're kind of between opposing 4-hour fair value gaps. So I do want to take that note. Also, the 1 hour, what I'm looking at is I had this marked because remember yesterday I had this order block here. So we hit that order block. We pushed up into this area here, left kind of some relative equal highs up there. Then we had this fair value gap, this SIBI, and we reached up into it over here. And then we had this one, this BISI here, and we just traded straight through it. So I had it marked because I wanted to see what we were going to do in this one. But especially because we're between two opposing 1 hour fair value gaps. And it looks like we're just going straight down through my sell side here that I had. Which this bar doesn't close, of course, until 10 a.m. But we'll see what happens there. And then the 15-minute, this is where I had my sell side liquidity. So I saw these three relative equal lows right here. These three lows. And I immediately knew on the 5-minute and 1 minute, this is going to probably be really, really smooth. And that just so happens to be the London low. Then we have the Asia low right over here. And then we have this low. If you look all the way over here where we pulled back right there. And then we have this low. I mean, those are like really within ticks apart. And then this 15-minute fair value gap right here. So pretty much what I was expecting and wanting to see is price run this here, this area. We'll see if it keeps going or not. But if it does, I do have a sell side liquidity lower. There are reasons to keep going down, but we'll see if it does. But with that fair value gap above us that just formed, there's always that possibility of it running back up into it. So we'll see here. As of now, we're just going straight down. I don't have, for the immediate though, or for this morning session, I really don't have a strong reason for price to want to go up, to make its way higher. Like I said, we do have that fair value gap. There's the midpoint of it there. And we do have this high and this high. Maybe it wants to run up there, go up there, but I'm not sure if we're going to do it in the morning session here. So we'll see. Look how close we got just now. So let's go to the 5-minute. And as you can see, look at that level here on the 5-minute. Smooth. We're going to go get that. What would be nice is if we left this low here and we come back for it later. Okay, so we went straight through this 1 hour fair value gap. Let me get it out of the way because I hate having my charts marked up there. And then we have, let's go to the 1 minute here. let's see what we have for an opening range gap. We do have one. So we had the close there. We had our open there. Opening range gap for today. I mean, hey, if we leave this low here and we go, well, nope, spoke too soon. I was going to say, if we leave this low here and we go up through that opening range gap, that might not be a bad thing. However, now if we're going to take these lows out, sweep this area, we may come back up and close this opening range gap. We'll see. That might be the only reason I have to go up for now. So we'll see. We'll watch that. But yeah, in here, I mean, I was very confident in it going through this low. So you have multiple entries. I have one right there. I was actually looking at this and I was like, man, we're right before the open. It may keep going right there. Like all these before reaching that low could have been entries there. So, but I mean, I don't like taking a trade right before the open and then have to go through the open because it could get wicky and wick you out. So, and I don't like taking a trade right after the open either. So we'll see what we do here. We took these lows. Now I want to see if we're going to sweep further. I want to see the Asia low get swept also before looking for potential long here. And you got to be careful too because it may keep going down. But we can have a nice dealing range form here if we do want to kind of make our way back up. You'd have to wait until we actually have a nice low. So I don't believe that's the lowest low for now. I'm just going to give an example here where we'd have equilibrium, which is right here, this midpoint. So could definitely see a return to that after we're done going down, but we'll see. We'll see. Be a little patient. Nice, Max. Good job. Chris, how's your gold looking? Yeah, these are some good short entries for sure. Definitely some good entries there. Even this right here, this pullback up into this fair value gap at 932 into 933. I mean, you could be that this level, this sell side liquidity down here was, I mean, extremely obvious. And that's one of those ones where I'd have been like, here, let me show you on the 1 minute. That's what it looked like on the 1 minute. Right here on the left. That's the obvious sell side liquidity that I would almost jump into anything to just go to it, because that's one where I'm like, I know we're going there. I know we're going there. So I wanted it to wait for me, but all good. Now, I don't like that it left relative equal lows right here with this Asia low. So you got to be careful. It may want to come back and get that. However, it could be leaving that for later. So engineer some more sell side liquidity, come back up, take some, go to equilibrium or some internal range liquidity here, and then come back for it. Very possible. So wait and see. But don't get, I guess, too eager to go long yet, is what I'm saying. Now, I do want to see, watch this right here, see if this turns, see if this could potentially be a bullish order block as well. So we'll see. We might have some good action today. Let's see. And for those of you that are familiar, that used to trade the Apex Sniper system, I went ahead and added opened up a chart and added the chart trader. I don't know if y'all remember this. Over here, the chart trader. Because this, with that 15-second entry model, this will work amazingly. Because what it is if you're waiting for a change in the state of delivery and a closure above it and a closure above that bar, this is literally programmed to take entries like that. Where all I got to do is just click buy high, and if that bar closes up that I want it to close above, if it closes up, it'll put a order with this offset 2 ticks above the closure of that bar. So it'll put a pending order there, and it'll only get me in if it goes 2 ticks above that bar that I click. And if it ends up closing down, it just automatically cancels out that order for me, or it won't even place that order. So I'm going to test this out and see. Yeah. Yeah, ES took that level there. Now, it's irrelevant now that NQ is shot down as well. So this is more what I wanted to see here, like this, before looking for a long. So a bar back to back, even though the wick is lower than the first bar, is considered relative equal lows. Not sure what you mean there, Chris. I don't look at bars back to back for relative equal lows in most cases. And it depends what chart you're looking at. Now, if I see it, like I showed there on the 15-minute bar chart, if I see a back-to-back, there may be something on the 5 or the 1. But if I see, like how I showed right there, the 3 candles on the 15-minute, back-to-back-to-back, I know there's going to be something on the 5-minute and 1 minute. And you can see it right there. That's smooth. And that's the 15-minute there. $9.35, $9.36, $9.35 bar, but I said it's relative equal lows at $9.35 and $9.36. I don't think I said anything about relative equal lows here. Oh, no. Yeah, I wasn't talking about these 2 bars right here, Chris. I was talking about this low and Asia low. So not the back-to-back right there. I think you misunderstood me. I was talking about this low and the Asia low. That'll be relative equal lows. Yeah. So if I zoom out, or I don't know if, because it's the 1 minute, if it'll be able to see that. You have this low way over here. And then you had this low that didn't quite get there. That's relative equal lows right there. So if price would have ran away and went way up, that would have definitely been a target for later. Well, that just formed. So that you wouldn't have known that that would have been a relative equal low yet until it came down here. And it only would have been relevant if price would have ran away and went long. So now let's see if we're going to get... let's see if we're going to get... So we have this low. We have this high. Lower low. If price can come back up, we're going to have a breaker, a bullish breaker, and an inversion in here will be the golden inversion. That's just what I'm going to start calling it, the golden inversion. That's if price can come back up. Now, right here, we do have relative equal highs. It's not anything that's, a huge thing that I think price is going to draw to, but we do have it. Now, if we go to each bar, the high of this bar is 667.50. The high of this bar is 667. So these are literally 2 ticks away right there. So price probably will come back to that. Chris always needs more coffee. He actually mixes his coffee and Monster together. Just kidding. All right, so we'll see if we take these highs, this inversion, if we get an inversion here, could be the golden inversion. Potentially. But I want to see these highs taken, and I need to see it, be convincing. Because it might just rebalance this and continue down. It's always a possibility. Hey, Thomas. Welcome, welcome. Coffee Monster NQ money bag. Like it. Hey, that's a shirt. Somebody make a shirt. Coffee Monster NQ money bag. So golden inversion, I just kind of made up that term, but it's the logic is not made up. So basically, when you have a breaker, if you're familiar with what a breaker is this pattern where you have market came down, came back up, made a high, made a lower low, and then if it goes up and makes a higher high, this is a breaker pattern here. So when you have a breaker, and if there's a fair value gap in this leg right here, so if you look at point 1, 2, 3, and then 4, the leg from 2 to 3 here, if there's a fair value gap, like there is here, which is a SIBI because it's going down, right? If you have one and then you get a breaker pattern and this becomes an inversion, that right there, that fair value gap is the good inversion to take as a trade. Like this one would be an inversion that should hold up and send price higher. So I just started calling it the golden inversion. That's the golden inversion right here. And we got it. So now, but I need price to take this high right here, basically, for it to become a valid area of entry if I want to go long. Nice, Will. Thanks for that commentary there. The 941 short. Oh, yeah. Okay, gotcha. Right here, this fair value gap. Never gave a change in the state of delivery on the 15-second chart, so it would have never been a short. Okay, now we have our breaker. And by the way, you don't need the bar to close above this for it to be a breaker. You just need it to trade above. So now we have a breaker. Oops. I got rid of... There we go. We have the golden inversion. And we have a fair value gap right here. So it might overshoot this fair value gap to go into this inversion. And we do have a lower fair value gap in here as well. I don't necessarily think we reach for this one. But now, reaching into here, I'm going to look at the 15-second chart for a change in the state of the delivery. See, if I go to the 15-second chart here, basically I need price to close back above that there and then go above the bar that closes above that to be considered an entry. And that's the confirmation that will save you from price not doing what it should be doing. Because see, now look, let's go back to the 1 minute here. We came down. What very well could happen if price wants to be bearish, we could get a SIBI in here. Okay. Which we didn't, so that's a good thing. So basically, I need a bar to close above this and this here. There you go. That just saved a trade. You know, prime example. Normally, I mean, this is why I like this so much. Normally, I would have probably liked this trade. Yeah, I would have normally liked this trade. It's given me no reason to not take this. You could call this a market structure shift where we took these highs. We got a breaker, right? We got this inversion. We got some fair value gaps. Normally, I would have went long there. Yeah, I didn't see this coming either. I mean, the market may just want to be bearish today, and that's possible because like I said, we still have a lot of reason to come down. Look at this. And I have a sell side liquidity at 404. I didn't think we'd get there, but the way price action is looking, it might not be out of the equation. So now this is reclaimed. This is no longer an inversion. This will be reclaimed. Then we're going to have a fair value gap in here. Right there. And then we have a reclaimed fair value gap right here as well. Basically right there. So literally, well, yeah, and so that's a good point, Thomas, because I mentioned that 4-hour fair value gap. Like, we're in it now. We're probably close to the midpoint of it. Yeah, so we'll see. I mean, we're in that 4-hour fair value gap. So you do have to be careful here. See, look, let me go to the 4-hour real quick. Nope, that's the daily. Right here, we got this 4-hour fair value gap. And we're in it. We've almost traded all the way. We've almost rebalanced it completely. See, now we can mark this one as well and just go to the 15 seconds, see if we get a change in state of delivery. And if you want to risk it, you can risk it. Yeah, we do have some Fed speakers as well. I noticed that. So you got to be careful of that as well. But, hey, I mean, yeah, we may be getting some shorts may be in play. But at the moment, here we go again. We basically need to come down and close below this if we're going to take a short. And I would literally just target, I mean, you got the new day opening gap low. You got the new week opening gap low. But man, prime example of why I like this entry model. I'm telling y'all, I probably would have taken that long. I would have taken that long before. Oh. I'm going to short this. See if we can make it down to this new week opening gap low. And I'll probably move to break even quicker than on this because of how price action is right now. Probably once we get past this new day opening gap. But like I said, we are in that 4-hour fair value gap too. So we'll see what happens. If we hesitate or struggle too much here, then I probably will get out. So I am trying to be a little quicker on, you know, break evens, getting out of trades, stuff like that if it doesn't work out. So now we passed that new day opening gap. I'm going to go to break even to cover. Just in case if this can't just keep going down. And I'm okay if it knocks me out. I don't care, to be honest. So because we're hitting that new day opening gap, and I don't, yeah, see, I got knocked out, but it's fine. Looks like we had a new 1 minute fair value gap here as well. And that's the risk I'm taking of getting knocked out. Yeah, see, look at that. I got knocked out, but it's all good. That's going to happen more with this style of trading here. For what I'm doing. Now, we do have this 1 minute fair value gap right here that we didn't go back into, so I just wanted to see if we were going to go back into it. But, and also I moved to break even a little faster. Like I could have stayed in this, right? And it may keep going down, but I moved to break even a little faster on that one. Not necessarily because it's just because I don't have a really strong target to the downside. Like I said yesterday, if I don't have a really strong target, then I want to be a little more cautious. If I like the entry, everything's looking like it'll keep going, I probably will move to break even a little faster if I don't have that strong target. So like here, we never pulled back into that small one. And the other thing is because, yes, we pulled up into this fair value gap, and then we did come down, like I said, right there and gave me the entry. However, there's still that possibility, like it went down a little bit, and there's still that possibility it could reach up higher into this one since it left it open. So that's also another reason why I wanted to move to break even a little faster than normal. So we gotta, I think this keeps going down, but that 4-hour fair value gap too made me a little uneasy because we could go right here. Here's the 4-hour. We have that 4-hour fair value gap, but then also here's the bodies. We're approaching the bodies where it closed and opened right here, and it could struggle right in here. It could struggle. So, and it might not, but I just had a few reasons to be cautious on that one. Yeah, all about the balance of probabilities. So again, so this is my logic with doing this now as well. My logic is I should have less losses. I may have a few more break-evens, but I have the opportunity to take more than one trade now in a day. And I really like that. Because y'all know my philosophy of why I've only taken one trade in the past per day. But with this 15-second entry model, basically it allows you to because the risk is less. Like, that's the thing. In the past, if I missed an entry on the 1 minute, by the time if I find another entry, it's my risk, my stop loss I have to have is too big. Like it's too big and I can't take it. So with this 15-second order entry, like you can get back in and basically still have a limited risk. That's what I love. So today, I mean, I don't know if I'm going to get, it's 10 a.m. now, and it hit that new week opening gap low. Unfortunately, it took me out at break even, but you know, hey, I made $63 total. Yeah, exactly. Your risk reward is going to be a lot better. So what I'm looking at, oh man, this thing is going. It's all good. We might hit my sell side that I had down there. Dang, I have 404 right there. And where did I get that from? Go to the 15-minute chart. This low right there. Now you got to look. We do have an inversion right here as well. Right there. We had this low and we have this 15-minute fair value gap, but I think we may just keep coming down to that 404. Let's see. I do like that we are having some more volatility now. So yeah, that's my logic behind all that as well. And what I want to do and what I've been watching and testing as well is putting some money management behind it. So for example, if I'm short, right? And let's say, well, that's a lot. Let's say I'm aiming, I don't know. My target would be 60 points, for example. And I have a risk of like 20 points on the entry. Basically, once this gets to like 20, 30 points, I can cover at break even. And once it goes like 40, 50, I can start, you know, moving my stop to cover at 20 points profit and stuff like that and start locking in profits, right? So managing it a little better. Normally I would just give it the room and say, you know, if it took full loss, it takes full loss. But I think this way it's going to allow me to manage my risk a lot better. So yeah, so look what happened here. It did run these relative equal highs right there. Look at the body. Look at the body. Ran those relative equal highs and just shot down. I mean, this is beautiful price action today. It does suck that I didn't catch it. And it's just going to run right down to that sell side liquidity. But it is what it is. FOMO. Can't have FOMO. Can't have FOMO. If it runs without you, it just runs without you. Because you can't chase. The second you try to get in this to catch it, I mean, it's just going to have a nasty pullback on you. So, it is what it is. So, let me go back. Let's go back to my entry here and look at that. Oh, man. Look, it barely got me out. So, 556 is where it took me out. And the high right here was, I guess it got me out 4 points. About 4 points. But I had my stop above here. And, you know, I was a little cautious. I could have kept my stop there. It would have been just fine. But, you know, I already went through all the reasons why I moved my stop to break even. All good. So we haven't hit that 404. But let's look at the... We'll probably... I don't know. I say we probably will pull back. But you just never know. With this price action... I mean, look at that 15-minute chart. Straight down. It might not pull back before taking this out. That's good, Max. That's the way to do it right there. Yeah, to be honest, Thomas, if I just got to wait and see what happens here. Because if you look at the 1 minute, we have multiple fair value gaps, right? So that's why I do like the 15-second confirmation when it pulls into that fair value gap. You can see if it's going to continue. But if it keeps going down, I mean, we have this sell side liquidity right here. Now we're in this opening range gap that never got fully closed from 1024. And here's the low, and here's previous day low. Like, if we keep going down, we very well may see this 268 to 280 range today. But just like you said, you got to keep in mind there at some point we may see a pullback, right? So that's the part that you got to watch out for and be careful of, even though you have lower targets. And I got to wait for confirmation that it's done pulling back. And I typically like the 15-minute chart for that. So we have 9 minutes and we'll get this fair value gap. Before this fair value gap here, I mean, it's way up here that we have one. So we're likely, I wouldn't count on price coming all the way back up here into the 650, 700. I wouldn't count on that. So basically what I would like to see if I did get into a short here, I'd want to see this low stay here. I don't want to see 404 taken. I would not want to see 404 taken. I would like this right here, creating relative equal lows. I want to see this 15-minute fair value gap form in the next 8.5 minutes or whatever, and price go into it and work its way in here. And then look for short out of that to 404. That would be the optimal, I guess that would be optimal for me to take a short. If it takes this sell side liquidity at 404, then it's tough. It is tough because if it does take that, like I said, I at that point I'd be fully expecting this to get ran through here. But at what point, right? If it takes this, at that point it very well could. You just have to wait and make sure it's not going to have a pullback on you. That's where I start relying more on the 15-minute time frame for the pullback. Where could it pull back to? These higher time frames. So I'd really, that first scenario would be what I'd prefer to see happen. If that makes sense. I hope that makes sense. So leave this low here, then we'd have relative equal lows. But like I said, the way we're seeing price run, it might not happen that way. It might not. So I will mark this fair value gap right there. So because of that, I don't necessarily need it to run back into a premium because I don't think it will. I don't think it will. Now, you could take this leg here and mark out a dealing range out of this leg because this was start of the move. So like this high, and if this does in fact turn out to be the low for now, this is where you could mark out a dealing range. And now you have equilibrium right here at about 540.75. And then let's jump to that 15-minute chart and see what that looks like, where that fair value gap would be. Look at that. This is where that fair value gap would be right here. And this is where that equilibrium is. So that would be a nice play. So you could look at it like that. And the midpoint of that 15-minute fair value gap is just above equilibrium. So technically, yeah, you would be going into a premium of that dealing range. And then you could look to continue down. That's a possibility. So it all depends on if we leave these lows here and head back up. That would literally be the only play I'd be looking for the rest of the morning. I'd be looking for it to return into a higher time frame fair value gap first. Yeah, that's the thing too. I'm still a little leery, and that's what kind of messed me up on that short that I was in, is this dang 4-hour time frame. Yeah, look at the wick here, right? This could be a rejection block here, and I got this fib where I could just mark a rejection block. Boom, right there. So you have the high, rejection block high. So you have it marked right there. Tapped it right there. It could work into the midpoint of it, but this is a area you do need to be cautious of. You do need to be a little cautious. Here, let's leave that there for now as a visual. And that could possibly send it up higher into that 15-minute fair value gap if that does form. Nice. Yeah, see a bunch of you guys, bunch of y'all were in this short. Very nice. Good job. Where'd you get in, Chris? You said you made it. You took that short too? Did you take the same short I took, or did you just take that 1 minute fair value gap? Because if you took that 1 minute fair value gap here, that's a huge stop you had to have. Uh-oh, Chris, you're trying out the 15-second chart now? I told you not to do it yet. You don't know all the rules yet, do you? I know. That's why I was hesitant to say anything to you, because I know you just like to jump right in. You're just a jumper. Yeah, Chris is Mr. YOLO for sure. YOLO. All right, I guess I'm gonna have to update you on these rules. Because if you took this 1 minute right here, your stop would have had to be at this high if you're going only off the 1 minute. Yeah, there are no rules. Chris makes his own rules. Well, Chris, I don't know what confirmations you're referring to, but yeah. Because the 1 minute, solely on the 1 minute, you have to allow for price to come back up into here. I mean, you could put it above this fair value gap right here in this inversion, but you still need at least like 45-point stop. Normally, yeah, that's an 87-point stop there. Big old move. All right, let's see what happens. We do have this fair value gap. I don't think this is going to play out, but it might. I mean, like I said, the way price action is now, it might not need to come all the way back up to that 15-minute. From this fair value gap to 404, I mean, that's a good 46 points. It might not need to go up to that 15-minute chart. That's my last play, though. This 404. If I get nothing, I'm probably going to get nothing. I don't know. It could go further. It could go further for sure, but Yep, look at that. It's going to go straight through that 404. All right. We're back up into, we hit that, look at that, 404. We are, what's the low here? We made 404.50. We got 2 ticks away. Now we're back up into this fair value gap. We do have that 15-minute fair value gap. Let's mark it out here. There we go. So I'm not necessarily expecting this one to hold. It might, but not really expecting it. We have this one. I really would prefer to see it go up into this 15-minute fair value gap, but I mean that it might leave this sell side liquidity for later afternoon or something. So this is where you just got to really watch it and just rely on your setup, your confirmation. If you are going to try to short through it, it may or may not hit it. So let's see. Which on that entry earlier, I didn't get to use that chart trader that I was saying that I wanted to try to use for the entries. This one. And so that's part of why I want to try to see if I can use this. It's because I didn't want to miss the trade. And if you're not careful, if you're not careful, you could, by trying to use this, because since you need a very specific close, right? A very specific close on the 15 second, and then and it's 15 seconds. It might not be as useful as I was thinking. Because when I was testing it out last night, the market was obviously very slow. So maybe we'll see. I'm gonna keep playing with that because my thoughts are, if a tool like that could be useful, then I could have one developed specifically for this setup. That's my thought, anyways. So we'll see. And I'm really not. We hit this fair value gap. I'm really not convinced of it yet to keep coming short. Obviously, we left some bissies in here. So I would want to see it. And I'm probably not going to get a trade because by the time it comes back through this area, it's so close to that 404. We'll see. Now this one's an inversion, so might not get anything else. Might not get anything, which is okay. 1020, about to be 1021. However, if we come into this 15-minute fair value gap and we can work in there a little bit, do a little price action working, and then get some displacement down, then we may be onto something. We have this one. I need to set here. I'm going to do that now because I don't like it on this 1 minute to extend all the way anymore. Let's see. Let's go ahead and just save this as a generic. Thanks, Chris. Appreciate that. That's his donation to YOLOing Long, I guess. Appreciate it, Chris. Thank you, sir. Thank you. All right. Let's see what we're doing here. So what I would be looking at, like I said, is if we work our way in this 15-minute fair value gap in here, and if we have some obvious displacement down like that, then I wouldn't care about these bissies here, okay? Because then we'd have obvious displacement down, and I wouldn't want it to take this low. But what I would want is price to work its way in here, give some obvious displacement down, fair value gap, go up into it, then I could consider shorting somewhere in here through that 404. Maybe that midpoint of that opening range gap there. So now I really don't care about those fair value gaps that I just erased because I need to see some displacement down. Otherwise, if this keeps just trading all the way up through this 15-minute fair value gap, it may go up. But I really wouldn't be looking for long unless if we trade like above this area right here. So Chris is awesome. Oh, by the way, I don't know if y'all saw the Apex $40 PA sale. I meant to open up with that and I forgot. Got extended till November 11th. So get your PAs. I need to get my evals ready for some PAs. Yeah, that's what I'm thinking also, Thomas. That this area basically was enough to reject and push it up, engineer some more sell side liquidity down here. So now it's going to run up, and I'd be looking that if we do end up displacing down somewhere, and coming down, that yeah, I'm definitely not. I wouldn't be under the impression that 404 is where we're stopping. I would definitely think we're going to come down lower. Got plenty of reason, plenty of room to come down lower. However, that could be later in the day. It might not be during my morning session. So you got to keep that in mind. And as you get closer to that 11 o'clock hour, if you're still trading, then you got to remember that lunchtime, right? 12 to 1. You don't want to be in a trade. If it doesn't happen before the lunchtime, then basically you'd be looking for the afternoon session. Yep. So, and this is not displacement, by the way. It's just a down close candle. I need obvious displacement. I mean, it could be the start of something, but I don't think I need it to be, to really show me we're going to displace down. So here's that dealing range that I talked about. From that move. Here's the midpoint right there, equilibrium. So it technically went into a premium of this dealing range here, which was right at almost that midpoint of the 15-minute fair value gap. I'd love to see price stay in the lower half of that 15-minute fair value gap. And like I said, just displace lower from here. Okay, let's see if we get something. Come on. Displace slower. If we don't displace lower here soon, then I'm probably just gonna gonna call it. But what we could see as well, in case if it doesn't displace, we have this high. We could work our way down, make one more little higher high, and then displace. So I never rule that out. That's also why looking for displacement is pretty is a pretty key thing to do. And I think our speakers are coming on like at 11 is what I think I saw. So watch out for that as well. Yeah, our first speaker comes on at 11. It's a low impact yellow folder, but you just never know with the state of the economic conditions right now. Low impact Fed speakers can maybe move the market like we're not used to. You entered off this little one here. Yeah, I want displacement. That's good that you manage your risk though. So that's the thing. Like if you take a trade that, you know, call it what it say what it is, you know, just a little bit more of a riskier trade or riskier entry. There's nothing wrong with that, especially if you manage it well, like right out of the gate. Just like I did earlier, just like Thomas says he entered off the 1 minute fair value gap here, but moved to break even already because it's risky. Like that's exactly what you should do to manage your trade. As long as you know you're mentally prepared to accept break-even trades. Because just like my trade earlier, that is the part, that is what can happen, especially if there's, I guess, nothing that is formed for you to be like, all right, let me put my stop behind this, like a new fair value gap or a, you know, swing high or something if you're going short. If there's nothing like that, you have to mentally prepare yourself that it could come back, knock you out at break even, and continue in your direction. And for some people, that'll I know for me, that used to mess me up. And that's why I used to say, I'd rather take a full loss than move to break even too early, because I just mentally, I couldn't handle it back then. Where if it knocked me out of break even and then it kept going, I would say, God, dog it. Like, why did I move to break even already? I should have just left my stop and I would have had a winner. That used to mess me up. Not anymore though. All right. So now we might be seeing some displacement. Hopefully this doesn't go to 404 without me, or through 404. So I do want to prepare in case we get this here. It would be nice to see it trade all the way through this fair value gap first to basically rebalance it and then pull back up. So like go trade all the way to the bottom just like that and then pull back up into this one. That way we have if it pulls back into this one, we'll have a clear runway to just go down. So don't go without me. Thomas, you're probably in a pretty nice profit position if you didn't get knocked out at break even. Yes, for the most part, Thomas, I do stream every day, except if it's a day that I don't trade. For example, like I normally don't trade the day before CPI or the day before NFP or the day of FOMC. So like those days that I'm not trading I'm not actually trading, I don't stream. All right, so now I'm down to the 15-second. Let's see if we return to this 1 minute fair value gap. You took the retest of the 1020 inversion already out. Nice. Yeah, that's another thing. You have inversions as well. You have this inversion. And if price retests it and you like that inversion and it gives you what you need right here, you can hop in. See, we came back up into it here. Price came back down. Boom. So we'll see if we can get back up into this. And right now, I'm just trying to play by my normal rules of 1 minute fair value gap entries, just using the 15-second as confirmation. So hopefully this doesn't go all the way through without me. If we can see it pull back into this 1 minute, and then I can get a confirmation hop in, then I will. And I could still get me about a nice little 30-point move, unless if it goes to it without me. Oh, we might be... hold on. Data issue here. Let me refresh my chart because I can see where I have a little data blip. There we go. We got a fair value gap right here too. We haven't returned to it yet. Now let's go to the 15-second. Yeah, it might go without me. And it's okay if it does. Then I'll just shut it down. Yeah, the 15-second goes fast, but literally what we're doing here is not trading. We're just executing, using it as confirmation and execution, but trading the 1 minute chart. Yeah, at this point, it's going to hit without me. And it's all good. It's all good. Because guess what? There's going to be days where I'm in and I get that move. Like I say, if you don't get the trade, at least knowing where price should go, watching it go there, watching it do all the things you expect it to do, that's a win. That's a win. And guess what? I didn't take a loss. So that's all that matters. Now, this could keep going. Like I said, it could keep going, but now for me, at this point, it probably will just keep going to the previous day low. Let's see. This might not be bad. It's not pulling back into any of these fair value gaps that I have here. And my entries require fair value gap pullback, so. Appreciate that, Thomas. Yeah, that's my goal. That's my goal. Like I say, I'm not like, the other streamers that are just trying to jump into trades, show executions and all that. There's going to be many days where I don't get a trade, where I get a break-even trade. I'm not always going to have those huge profit trades every single day. But to me, like I say, I trade as if I'm trading a live account like a trader should, because I do trade a live account. But also, I trade prop firms at the same time. It's because I copy them all together. Copy my prop firm accounts with my live account. And so I have to trade it like a live account. Like a live account. I can't just trade it, like prop firms, like where you just, blow and go, basically. Yeah, exactly, Will. We're hitting this midpoint. We very well could keep going down, so we'll see. We might even be... Times it. Yeah. Yeah, that's a great quote right there, Will. I'd rather be out of a trade where I want to be in than in a trade where I want to be out. How many times have you been in a trade where you're like, man, I wish I wasn't in this thing? I'll move it. And that's what I was talking about yesterday. I'll move to break even once this goes back into profit. And then it gets to your break even, to your entry, and it's just like your entry is a barrier. Boom, boom, starts hitting it. It's like, come on, I want to get out. When really, you should probably just exit at that point. But I know me, I'm like, no, as soon as it goes into a little bit of profit, then I can move my target or my stop. And it just never happens. And you're like, man, I want out of this thing. I just want out. We could be trying to set up another 15-minute SIBI. Potentially, if price hangs around down here. But I might give it a shot if we pull back into, because here's the sell side liquidity. If we pull back into this fair value gap and continue down, then we probably won't go back into that range, and we may head for previous day low. But I'm not going to keep forcing this, though. Like, yeah, Thomas, I look at this in two parts, really. Well, the three things I always say. You got to have a strategy, right? You got to have a strategy. Number one, for sure. You got to have some type of system, some strategy, some entry model. And number two, you have to have strict money management plan. Know how much you're going to risk every single day. No matter what, don't risk more than that. And then number three, you have to have the discipline to follow number one and number two. Like, it's really that simple, but it's so hard, as we know. But just try to keep that logic. Strict plan, strategy, strict money management plan, and then just follow both of those, number one and number two. And you'll be all right in the long term, as long as you have those two things. And that's where I say you'll be all right long term, because there's going to be times of frustration. There's going to be losing streaks. There's going to be things like that happen. But if you stay with that, that's how you build consistency, is staying with those two things and not veering off. I can't tell you how many times I've veered off to try to find, this isn't working. Try to figure something else out. And it's like, no, you can't do that. You just can't. If you have something solid, you can't do that. You can refine it and make minor tweaks like what I'm doing here with this 15-second chart confirmation, but I'm still overall trading the exact same way. Exactly, Will. Exactly. Let me go back to the 1 minute, because you can get confused if I stay on the 15 second, because I'm not trading the 15 second. I'm trading the 1 minute. So, all right. It's looking heavy. It may just keep going down lower. And it's getting close to my time here, because I only stream for about an hour. I will hang out a little bit if it's looking juicy. It's a little juicy right now. Because if we head back up into this, see, and this is where you got to be careful, because you can't expect everything, every move, all to happen in your session that you're trading. And when I say session, I'm referring to like the kill zones, like the morning's New York AM session, right? Then you got lunch. Then you got the New York afternoon session. Afternoon. Then you got Asia, London, all that, right? So the session that you trade, and like me, I trade the New York AM session, obviously, and I really only trade until, for about an hour. So that's what I call my session. Man, that was so backwards. That's what I call my session, right? So during my session, I have targets, points of interest, all that. Now, I believe price could continue down here. But when I say it may not happen during my session, it might happen after 11 a.m. It might happen in the afternoon session, right? So we're this close. What's that? 50 points away. It probably will happen in this morning session. But you can't marry that idea, because if price decides to, just head all the way back up here, then you could expect, okay, this is probably going to happen in the afternoon then, if it does. So that's all I'm saying when I talk about happening during my session or not. So Will said Chris is the expert at disciplined YOLO. YOLO with a strategy. All right, yeah, and this is taking its time and all that, so it's... I want to hang around, but I really do have to hop off here. And at this point, it's just slowly creeping. I guess not really slowly creeping, but like you see how it's working its way down here. Unless if it comes up into this, then I get some type of confirmation to head down. Otherwise, it might just keep working its way down there. Now, for sure, for me, if we take previous day low in this area, that 268, 280 that I mentioned earlier, if we take that, then there's nothing else for me for the day. So that's what I'll be looking for, and I'm saying all that because I do have to hop off here. But I'll be back tomorrow. So hope to see y'all tomorrow. And like I said, Apex still has their they extended that sale till November 11th, so grab your PAs if you can. 70% off, 70% recurring, but $40 PAs. Insane. Oh, Jeanette can hear me? Hi, Jeanette. All right, y'all. See y'all tomorrow. And I do need... Oh, did my chart freeze? No. I do need to hop off here, so I'll see y'all tomorrow. Have a great day. If you're going to keep trading, as always, trade well, everybody. Take care.